Hello everyone, Dave Landry here from DaveLandry.com. This is your Daily 5. Once again, I am still excited about stocks and I'm still excited about crypto. Even though we had a little correction here and there, I think stocks are doing really well. I'm going to show you why now. So let's dive right in. Let's take a look at the Landry Light in the S&P 500. Landry Light is simply lows or greater than the moving average. Very simple indicator, but very powerful indicator, especially using the 30 EMA, which is one of my favorite moving average. As you can see, we've had 103 days of upside Landry Light. Now, again, as a reminder, Landry Light just counts the number of bars above the moving average. It does not measure magnitude or anything like that. Now, let's take a look at the TFM 10% system with the S&P 500. The premise here is that when a market begins to get into a little trouble, it tends to get into more and more trouble. And 10% was a good round number when I was developing the system many years ago. And I noticed that once a market lost about 10% of its value from the 50-week closing high, things tended to get worse from there. Now, one of my clients, a gentleman named Jeff, recently pointed out that once you get 5% or more away, that's a good place to think about getting out of the market. I did the testing on that. You're going to have more whipsaw, but you're also going to get out of the market right before things really get ugly. You get out a little early, but of course you'll have more whipsaw. Now, I'm not going to spend a lot of time on the system. If you go to YouTube/Dave Landry, you can find out a lot more about this system, but really simple system. And the idea, or the designer's intent, so to speak, was to get out of the market when the market is in trouble, to try to avoid the diaper change type of moments. That's an Ian McActivey term, and I'll flesh that out in just one second. But anyway, we had a recent sell signal. As I said ad nauseum lately, that signal turned out to be a whipsaw, but that's okay. As I often say, quoting my good friend Greg Morris, whipsaws are frustrating, bear markets are devastating. You could survive frustration. Now, as I've said quite a bit, the buy signals are a little bit more stringent than the sell. A sell signal, again, closed below the 50-week moving average, and this is a weekly chart, and 10% or more away from the 50-week closing high. You get out of the markets, no questions asked. To get back in, a little bit more stringent, you need 2 bars of upside Landry Light. That's 2 weeks where the lows are greater than the that's 2 bars where the lows are greater than the 50 simple moving average. So again, this was a whipsaw. You got out of the market, and a few weeks later, you get a buy signal. That's okay. It happens, spelled with a silent SH. But the good news is we've had a pretty good run since this buy signal in here. So far, so good. Now, let's take a quick look at the diaper change moments. Notice way back during the Depression, the market lost 83% of its value. And keep in mind, these numbers are after you exit the market. So the market actually lost more than that, peak to trough. In this case, 43%. And as you go throughout history, a lot of 25%, a lot of 30 or near 30%, 40% every now and then, 50% every now and then. And this is one thing that they don't tell you about buy and hold, is that you're going to lose half your money every now and then, believe it or not. And that goes for any asset class. If you get really bored, take a look at gold, take a look at oil, take a look at Bitcoin, take a look at any commodity out there, take a look at any stock out there, and sooner or later lose half of its value. And as you can see, quite a bit of big dips in here, these big diaper change type of moments. Notice in 2019, this was actually a bit of a whipsaw filter because it got you back in right around the price it got you out. And the market lost nearly 30% after it got you out, even though it was a whipsaw. The designer's intent of this system was to get you out of the market so you could sleep at night. And as I've said ad nauseum, I had a friend who was visiting right around that time, and when he lost another 30% of his retirement, he was not sleeping very well. Now, if you plot this on a chart, and this is included in the ACP platform, by the way, as a free plugin, just like this video and click this little plugin down here and you get it for absolutely free. But you can see that these occasional 50% spills are fairly frequent in markets, and even a 20 or 30% spill, which is pretty significant, happens fairly often. And if you get bored again, go back in time and take a look at all those sell-offs over the years. So as I've said recently, as long as you're in the green zone, things are generally pretty good, and don't get too excited about the markets. Try not to get too caught up in every zig and zag. Once you get into the pink zone, which is 5% or more away from the 50-week closing high, you might want to get a little concerned. And then once you are 10% or more away from the 50-week closing high, especially if you're below the 50-week moving average, you might want to think about getting out of the market. By the way, there's no guarantees in trading, obviously, but this little system, which has been out for quite a few years now, maybe 10 years, I don't know. I don't remember exactly when I first published it, and it's free. Obviously, I just gave it to you. But historically, it would have kept you out of every bear market in history. Again, no guarantees, but that's one reason I'm so proud of this silly little system, and that's why it's a trend following moron 10% system. That's what I actually called it. Anyway, just for S&Gs, I thought it'd be fun to buy 100 shares of the Qs. I know you're going to party with me. So the entry was there, and that was my actual trade. I bought 100 shares, and based on the mark-to-market, which is right around where the market is now, as opposed to the screen grab, in case you were wondering, I had open profits, or I have open profits of $12,440. Now, I never dreamed it would go this far, this fast, and I just figured it'd be like a throwaway trade. 100 shares, who cares, just for fun. And keep in mind, I don't trade mechanically, although I have developed, especially 20-something years ago, thousands of mechanical systems, and maybe all that programming made me more of a discretionary type of trader. But anyway, just for S&Gs, I thought it'd be fun to buy 100 shares of the Qs. And one thing that's a little scary, and this goes with longer-term trend following, and this is why I take a hybrid approach where I'm taking partial profits, I'm getting my stop up to break even, and then I'm allowing that stop to gradually widen out over time. So I'm going in for a swing trade, but I stick around for a free roll, so to speak, if the market continues to move in my favor. In this case, I did not build any money management into the system. The idea was to build a system to get you out of the way. I didn't think about what happens once it gets you back in to the market. So you might want to add a little money management to something like this. I'm kind of foolish to not take profits after being up 100 and something points like this, 120 something points. But I'm just going to follow it mechanically to see how it shakes out. But it is scary, especially with pure longer-term trend following as opposed to a hybrid approach like I take. And if you go to davelandry.com/free-book, you can download my books for free, and you'll see the money management in there. But anyway, based on current prices, if I were to get stopped out, I would give up 60 points. That's $6,000 of this 12,000. So it's starting to add up a little bit. Now let's shift gears and talk about the Landry Light pullback nearly, and the SMH, and update the SMH. I'm a huge fan of the semis supporting what's happening in the overall market. I haven't done any system testing on it, but I'd be willing to bet there's something there. There's probably a slight edge, or maybe more than a slight edge, if you only bought stocks when the semis were doing well and you avoided stocks when they were not. But anyway, you can see we had lots and lots and lots of Landry Lights, and then we pull back almost to the EMA. Now, this is not a Landry Light pullback technically because it didn't touch the 30 EMA, but for all intents and purposes, it is a pullback, or a generic pullback, which I also trade. But anyway, the market gapped higher, and so far it hasn't done a whole bunch since this trigger on this pullback. But longer term, the semis still look pretty good, even though they've consolidated a little bit in here. And as I just said, if markets just went up straight up all the time, sooner or later they wouldn't be a market. So consolidations and pullbacks, although they can be painful, are actually good and healthy for the overall market. All right, one thing that's kind of exciting here is the energies are doing exceptionally well as of late. You can see back here we had lots of red and green interchanging Landry Light, and the market was just chopping back and forth. Now, what I like to do is I like to draw a horizontal line or connect the dots, whether it's horizontal, up or down. But where are we now? And then go back in time and see how far you can go back in time with that line. And as you can see, for months, the energies did absolutely nothing. And then they began to accelerate higher, and now we have lots and lots of Landry Light to the upside. Now, persistency just means the market tends to go up day after day after day. You could draw a line through as many bars as possible to see how many you can intersect. Mathematically, that's known as linear regression. I just like to draw a line through the bars. And acceleration is also important. So as you can see, the energies have accelerated higher, and the trend is a very persistent one. I have two setups, and they should both be in those aforementioned books, which you can get for free. One is accelerating momentum strategy, and the other one is persistent pullbacks. And in this case, when this market does pull back, it's going to be a combination of both of those. So I think it could be a tremendous buying opportunity. I wouldn't just buy it because it's going up, although in crypto, and if you could go back in time in 1999, sometimes that's all you have to do is just buy the markets that are going straight up. But in more recent times, in stocks at least, wait for pullbacks before looking to get long. But as you saw there was lots of persistency. Now, along the lines of commodities doing well, let's take a look at gold basis the GLD. Once again, you can see we had a market that looked like it was beginning to trend, but you draw your lines and you can see that on a net price movement, it really hasn't gone anywhere. And then notice that we had red and then none and then green and none and then red again, Landry Light oscillating back and forth. So that suggests a sideways market. And of course, just look at the market and draw your horizontal lines, and you could also see that the market is traded sideways. And once again, the good news is the trend is accelerating here and is fairly persistent. So these idiots on the radio who are always telling you to buy gold, now it looks like they're right. But then the question is, if it's going up, and it's going to keep going up, why would they sell it to you? But that's another story altogether. Anyway, I get frustrated because they act like gold will protect you. Gold will not protect you. Stocks will not protect you. All asset classes at some point in your life will lose at least half of their value. All right, let's follow up on the Landry Light pullback in Bitcoin. And the last year daily 5, I pointed out that we had a Landry Light pullback. Again, it just means you have about 20 days or so of upside Landry Light, followed by a pullback to the 30 EMA. And last time I talked about a plausible entry being around 70,000 with the stop at 60,000. And if you subtract 60 from 70, that gives you $10,000 for your initial profit target. So up here around 80,000 would be the IPT based on that. Again, with the money management, when you hit the IPT, you want to bring your stop to break even. You actually probably want to trail it a little bit before then. And usually I trail on a one-to-one basis roughly before it hits that initial profit target. Once it hits the initial profit target, you want to bring that stop up to break even. That way, and you've taken half your profits off, remember, but that way, barring overnight gaps, the worst you could do is break even on the remainder of the trade, and you have the potential for a longer-term home run should the trend continue. So a couple of random thoughts. The state of the market is good. Check back often. We've had a little correction, a little consolidation. A couple areas selling off here and there like health services, but I'm not too concerned just yet because new areas such as gold and energies are beginning to rally in here. The semis still look pretty good. As I often preach, it's great when the semis confirm what's happening in the market, as I preached a few minutes ago. I think Landry Light in the 30 EMA is your best friend. And you always want to pay attention to the net price movement no matter what your favorite indicator is telling you, even something from Big Dave. If Big Dave's Landry Light is saying the market's going up, but you look at it, it's like, it looks like it's going sideways. It's going sideways. So draw your arrows and pay attention to what's actually happening in the market. Now, again, although some sectors are weakening, the rally seems to be broadening out a little bit into some newer sectors, so that's a good thing. And the semis, again, continue to confirm the bull trend. Now, Bitcoin and crypto in general has taken a bit of a break, a bit of a breather, but so far I think it's just that, a little bit of a consolidation, a little bit of a shakeout. And longer term, I remain bullish for now on crypto. I want to thank everybody for watching. If you need to reach me, davelandry.com/contact. If you would like to join me on Thursdays, I do a live webinar, unless it's a holiday week. You can go to davelandry.com/webinar to join. You can also find that webinar on YouTube, and my YouTube right here is at Dave Landry once you're on YouTube. X is T following moron, TikTok is trend following moron, and I do have a Facebook group, but you have to be at least a gold member of davelandry.com to participate. We have a great group. I get a lot of great ideas from my members, and it's just I have a lot of fun with it. It's the best thing I've ever done was starting that group. Anyway, I want to thank you again for watching, and may the trend be with you.